Happy Monday, everyone, and this week is going to be utterly crazy for the stock market. Oh, it's already a crazy Monday morning as it is. It is 11:30 a.m. Eastern Standard Time. Hopefully everyone had a phenomenal, great weekend. I had a great weekend, but I'm suffering with a sinus migraine right now, so please bear with me. I might be sounding a little sluggish in today's episode, but welcome if you are new. I put out videos on here Monday through Friday. I post free educational content on Saturday. This past Saturday, I ended up posting some education content, and I do have a playlist on my YouTube channel as well, too. This YouTube channel. This channel is still relatively new, so if you enjoy my content, feel free to smash the like button and also subscribe for more content in the future. I can go ahead and tell you that the stock market it's a scary place still. And the stock market might be a scary place up until maybe sometime next year, which is just really crazy if you think about it, because the amount of opportunities that are out here right now in this market is unfriggin' believable. The vast majority of stocks in the S&P 500 are below their 52-week high. Phenomenally below their 52-week high. I own actually many of those names, and it's a shell shocker. It really is. You know, nobody really wants to dabble in the stock market, but companies are putting up great numbers, but their stock price continues to go down. That kind of points to a lot of issues, such as geopolitical tension. We're in a macro tension environment. Macroeconomics, monetary, money, inflation, deflation. Deflation means we're in a recession pretty much, right? GDP and everything's going down. Inflation, GDP could very much continue to remain stagnated in a high like inflation. I mean, 2022 GDP was negative for 2 quarters. We had a recession, but our inflation was near double digits. So GDP is very much not the best indicator sometimes, but when we have very geopolitical events around oil, and today oil, ironically, is actually very much getting a kick to the downside. You're talking $83 a barrel. It's kind of really interesting because there's a lot of mixed signals in this market right now. If you want to see my public profile that I made dedicated for this YouTube channel, I don't think I'm going to get around to it in today's episode. I want to keep this video under 20 minutes here. But my previous video from a couple days ago, I show my public profile. Tomorrow, I'll go ahead and show my public profile. I've been saying that the last couple days, but I really do want to keep this video short. The chip stocks right now are selling off heavily because of fears around basically China's AI models being better than ours. Nvidia is getting kicked in the balls by 5%. I don't have any exposure anymore to Nvidia. I have a lot of exposure to AMD. AMD is getting dragged down to these levels that we haven't seen in a while. But AMD is going to be putting up very crazy numbers, I believe, next week for earnings. I'll get to that momentarily. So today on Monday, we're seeing, obviously, stuff in the Middle East very much, stuff is ramping up. Like, there's more tension in the Middle East now than there was a month ago. And 1 month ago, oil was heavily to the downside. Now, like I said, oil, it's still up there. It's not as low as it was below $70, but it's still causing a lot of fears, especially around interest rate hikes, future interest rate, like no cuts on the, even the market isn't even thinking about an interest rate cut. And it's definitely affecting interest rate sensitive stocks like SoFi. But I want to talk about in today's video, basically pretty much earnings for this week, which is going to be absolutely just enormous. And I also want to talk about stocks that I could very potentially buy this week as well, too. Tomorrow, actually, you want to know what? Probably going to end up showing my public profile in today's video because it kind of goes on hand to hand. So, firstly and foremost, today we got we have a whole lot of companies reporting earnings. none of the really big names are doing anything for today. And I'm not being sponsored by Whisperers, I should say. I just ended up finding this picture on social media. So indirectly, I am kind of advertising them a little bit, but I really do love this image here per se. Pretty much all the names grouped together as one. So Taco Tuesday tomorrow. I'm going to be enjoying actually some shrimp scampi tacos. Normally I'll just eat some beef tacos, but oh man, shrimp scampi tacos are utterly amazing. I don't own PayPal anymore, but I don't even think PayPal is, to be honest, I sold out of PayPal a couple weeks ago now, and very happy that they ended up having a bounce back. So PayPal for me personally is kind of really off my radar. Not really a whole lot, but Tuesday might give us what the consumer is really doing per se around a lot of consumer-driven companies. Obviously, Cheesecake Factory is reporting after earnings. That is a very much consumer-driven base. If you've never been to Cheesecake Factory, it's a phenomenal restaurant, not to mention their cheesecakes are utterly addictive as all hell. If you're definitely trying to cut back when it comes to terms of sugar, probably not getting their cheese, or maybe as, oh man, don't really want to dive into some health content, but their cheesecakes are friggin' awesome. When I used to drink a lot, I would go to the Cheesecake Factory, hang out at the bar, pretty much get some good, their chicken piccata is utterly amazing. Their black chicken salad is utterly amazing. Who doesn't love a high protein salad, right? Oil and vinegar or balsamic vinaigrette. Then my drunk dumbass would probably order maybe like 1 or 2 pieces of their cheesecakes. Oh, like I said, they're utterly crazy, but yeah, loaded with sugar, right? So cheesecake is going to tell us a lot about what the consumer is feeling in terms of eating out. We're going to see how these oil prices are really affecting people by going to restaurants. That's really big. JetBlue Airlines, really big once again. Are people traveling? Even UPS is very much important. Visa, seeing about debt levels are very important. Now, the big one is going to be on Wednesday. So, my baby, SoFi, right in the morning. No, I'm not going to be up early live streaming. To be honest, I really have been trying to increase my sleep at night. I highly recommend every single person on the planet try to really do that. I'm going to be waking up to either doing 1 or 2 things with SoFi because I own a tremendous amount of SoFi shares. And this is really going to aggravate a lot of SoFi longs. But actually, if you are a long-term investor in SoFi like me, I've been an investor since February of 2024. It's probably not really going to be irritating. It's irritating to people that are betting on SoFi, gambling, or I should say gamblers in general. And it's also people that are very much trading SoFi that's going to be frustrated. If I wake up and I see SoFi is down, I'm going to buy more shares. If I wake up and I see SoFi is up, which a lot of the times it is, a lot of times SoFi will be up by 5-10% post earnings, and then the next day they end up selling off. So if SoFi does do that, I'm going to buy more shares. So there's the probability that I'm going to probably buy more SoFi shares on Wednesday. It's probably going to be there because SoFi is very weird. Not to mention we have the Federal Reserve talking in the afternoon. So, it's the previous earnings for SoFi was actually after the FOMC meeting. This time, SoFi's earnings is before the FOMC meeting. So, I really want to see what Anthony Noto pretty much guides for the company. And like I said, if SoFi sells off when I wake up, I don't give a shit. I'm just going to buy more shares because I believe long-term in the company. And right now, a macro environment is very much heavily, it's pushing the stock price of SoFi down. The company is growing. The stock price is being suppressed by geopolitical tension that is affecting the monetary policy of the world, okay? Let alone the monetary policy in America as well, too. Other companies as well. So Microsoft, I don't own, but I really am excited to see Microsoft's earnings, their guidance for their CapEx spending. Meta is going to be, so I'm going to be loaded listening to conference calls all night long on Wednesday evening. I think I'm probably going to tune in realistically for Robinhood's conference call, and then I'm going to listen to Meta afterwards. Robinhood, I very well might actually buy some more shares of Robinhood. There's honestly a good chance that Robinhood may go into timeout for this quarter once again. And if Robinhood falls below $90, I'm going to pick up some more shares. I'm a Robinhood bull, but Robinhood very much relies on a risk-on market. And right now, this market, it's very much being propped up by chips, by AI spending. It's very risk off, especially with crypto as well too. So I really want to focus on Robinhood, and in the future, I do plan on live streaming during earnings, by the way, and also live streaming on this YouTube channel too. So definitely stay tuned for that content. Meta, I'll be listening to their earnings call probably after Robinhood, and then I'll probably be listening to Microsoft as well too. So Meta's going to be like Google. In my opinion, Meta's going to be like Google, where they're going to increase their CapEx spending. And by the way, Meta's a phenomenal company. I do have exposure to Meta, but I don't have as much exposure to Meta as I previously did earlier this year. I've actually sold out a lot of my Meta position because earlier this year they went up crazy with their CapEx number. And I ended up taking that money and I put it elsewhere because here's the reality. These companies, Amazon, which is reporting on Thursday, which is going to be big, Amazon, Google, Microsoft, Meta. When those companies stop spending money, the chips are going to be like Meta. They're going to be stagnated. And then Meta, Microsoft, Amazon, Google, and if I had to pick one of those companies, or rather what companies would I choose to take a long position? Well, I already have a long position theoretically in Meta. So it would be Meta that I would buy. Why is that? Because their compound annual growth rate, their CAGR, okay? They have the most attractive buy, the most attractive growth rate out of all the magnificent companies. They do. On the flip side as well, where are companies going to be advertising along with politicians? They're going to be advertising on Facebook, Instagram, Meta Universe platforms, okay? Furthermore, their CEO is a friggin' baller. I'm 38 years old. The guy is a couple years older than me. He's in his prime. A lot of people will argue that the guy has not even reached his prime. So he has a long ways to go. Jeff Bezos, and I really do hate saying this, Anthony Noto, I believe is 58 years old. Don't quote me on that. Hopefully he doesn't watch this video if I'm wrong. Mark Zuckerberg has a long ways to go. That, Robinhood. He reminds me so much of Mark Zuckerberg. He really does. The guy's an innovator. And he talks like, hey, if there's a problem, we're gonna think our way out of it. That's awesome. I'm bullish. Yes, I want to take that journey with you. So, I would own Meta. So, okay, let me put it in this perspective, right? Whether it is in 1 or 2 years, when all these companies stop, when all these companies pull back on their CapEx spending, okay? Because their CapEx spending is not going to go on forever. I am going to be heavily buying Meta. Would I own like another magnificent company? I definitely would. What is really attractive to me? Honestly, I may actually look at Microsoft for me may be very much more attractive than honestly Amazon. And a lot of people may think very differently. They're like, well, are you kidding me? I don't know. Microsoft being very like Microsoft, it's one of those companies that you look at, and for me personally, Microsoft and Amazon, or rather, why wouldn't I choose Google rather than, and the reason being is because Google, if you actually break down their earnings, their YouTube side of the business has really remained stagnated. And yes, their cloud business is utterly taking off and growing like crazy right now. But I really feel that Google is going to be growing at a slower rate than Microsoft. I really feel that Microsoft is going to make a gigantic comeback. I think Amazon is what I mean. Amazon is definitely up in one of the best companies in the world, but I see Microsoft as very much as the bigger growing company rather than Amazon and also Google. Of course, like I said, the company that I am going to funnel a lot of more money back into will be Meta, and that's because their CAGR is enormous compared to all these other companies. But at the same time, if I had to go with a second one to really pick, I would honestly pick Microsoft. Never owned Microsoft before. Yeah, I would definitely would not mind taking a long position on Microsoft. Water, cheers. So, I do want to listen to Microsoft's earnings. It's going to be a busy night for me. And if you do own any of these stocks, don't be lazy. Listen to their conference call. You get so much feedback out of the conference calls. I understand people don't like to listen to conference calls because even if the company is failing, you're going to hear the management team be like, don't worry, everything's fine, right? Yes, of course, the management team is never going to say, oh my gosh, we're going down with the ship, we're dying, okay? Famous words from Elon Musk, we're 2 weeks away from bankruptcy. Imagine all the people that actually bought that scary time during, when was it, 2014 or 16? I think that Tesla almost went bankrupt. But the thing about it is that you're not going to have management teams that are really going to be saying that stuff. They're going to be sugarcoating it. But what you do get out of the conference call is you get to really understand more of a verbal sentiment. Google's conference call is one of the boringest conference call you can ever listen to. It's very monotone. It's boring. Robinhood puts on a great earnings call. Investors relations is phenomenal. I will say that. And not every company's earnings are going to be exciting, but they're just going to be very raw. AMD's earnings are going to be extremely exciting. Yes, AMD will. But otherwise, yeah, so we have a lot of earnings this week, very much. Now, pretty much right now, going into SoFi's earnings on a technical basis, the charts, I mean, it's a coin toss, guys. It really is. We could go up by 10, 15%. We could very much go down another 10% here. It truly is just, it's a coin toss. AMD is very, very much getting a pullback. And that's because of a lot of chips, very scary. Not to mention Robinhood could Robinhood could, there's nothing stopping Robinhood from going back to the 70s. Yeah, I'll be buying this dip significantly. Palantir's going to run pretty much on software, so Microsoft's going to be playing very big into that. I mean, obviously Nvidia's earnings pretty much end of August, very, very much later earnings. AMD is obviously next week, talking about Tuesday, so very excited for that. But going on my public profile that I made for this YouTube channel, if you're new here, welcome. I started this I'm doing a public profile challenge here and taking this sum of money to six figures in the course of 17 months. It was 18 months, started 2 January this year. And I had to lower the account challenge because I was depositing too much money into this account. I do have some exposure to crypto, which I'm overly excited about. Haven't bought crypto since 2021. And I very much believe that crypto will make a rebound next year once we get done with the cycle. But pretty much this profile is very risk on. AMD can send this profile down by $3,000, $4,000, $5,000, and it has. AMD, when it was at its all-time high of 590 something dollars, I believe. This profile was 55,000, 50, 54, 53, somewhere around there. Does that bother me? No. Why? Because one, I am a growth investor, and when you are a growth investor like me, it comes with a lot of volatility. Can I sleep at night with AMD being 43% of the profile? Yeah, I'm okay with that much exposure. Why? Because I'm not looking to hold AMD for 10 years like I am for SoFi, and it's my strategy to very much ride the wave for AMD. I've been buying AMD on this profile since January of this year. On my private profile, I've been buying AMD well before Liberation Day of last year. Liberation Day of last year, I own a lot of shares below 100 bucks. A lot of shares. My private profile, oh man, I have AMD shares right now, even on this pullback, that I'm up by 400%. I'm up hundreds and hundreds of percents. Okay, my SoFi average on my private profile is $7.41. I'm holding a massive position of SoFi shares. I've stated this publicly for my SoFi bros and sisters out there. 1,642 shares of SoFi. I'm a raging SoFi bull. But as for AMD, I mean, AMD, once my price targets pretty much get hit, and call me crazy, I believe they will be hit, I'm going to be cashing some shares, because this money that these companies are spending, it's not sustainable. Okay, for anyone out there that's saying that this money of capex is going on forever, it cannot be sustained. So whenever this chip cycle is over, yes, I'm going to be scaling out of AMD. I'm not selling my entire position, but I'll be taking my chips off the table of what I put into the stock, and with profits as well too. And then I take that money and I move on to the next one. Okay, I mean that's how that's how you play the game. Been in the market now for 6+ years, made life-changing money, and that's how you play the game. There will be a time where I cash out shares of SoFi. Warren Buffett, the OG, right? Warren Buffett has never held a stock forever. He's even stated there is no such thing as holding a stock forever, okay? You got to take profits, and you also got to enjoy your hard-earned money, okay? Your hard-earned money comes from literally doing your own due diligence, listening to conference calls, listening to guidance, running price projections. I have a lot of videos on how to do that. We'll be making more. Actually, this Saturday, I'm probably going to be doing a price projection, like, rundown of how I basically... Yes, this Saturday is going to be really good, because we're going to have SoFi, Robinhood, Meta. We're going to have a lot of earnings to use as an example. AMD. Not looking to buy any more AMD shares. SoFi. I really love how my average on this profile is higher than my average on my private account. So SoFi goes down by 10%. I'm going to wake up and I'm going to look at my Webull account. This is Webull, by the way. If you are new to the market, I highly recommend Robinhood. Not being sponsored, I don't have a coupon code or affiliation with Robinhood. Robinhood was my first brokerage that I've used, and I think it's phenomenal. If I were to go back in January, I would have just made a second Robinhood account, because there are times where Webull is definitely a little annoying at times. But I'm gonna wake up, and I'm not even gonna go to SoFi's investor relation page. Okay, I'm just gonna buy shares if SoFi is down by 10%. If I wake up and SoFi is down by 10%, I'm going to buy more shares. Okay, that's what I'm doing. I'm buying the dip. If SoFi is up by 10, 10, maybe even 15%, I'm going to say cool beans. Not going to pay attention to anything. I'm going to walk my dog, come back, go in my kitchen, have my iPad, start cooking some breakfast. And then I'm going to sit down, and then I'm probably going to catch up on their conference call. I'm going to go through their investor relation page. Very important. I'm going to go to their actual website and look at their earnings. And then I'm going to start dissecting stuff. Then I'm going to, prepare for a video. And then later that day, we also have the FOMC meeting. If SoFi goes down after that as well, too, I'm going to buy more shares. That's what I'm personally doing. SoFi is very close to my average here. Now, if SoFi was like 20, maybe 22, 23 bucks, probably wouldn't be picking up any more new shares of SoFi, but SoFi is a screaming buy, in my opinion. If it's, first of all, anything below 21, 22 bucks, in my opinion, is a buy on SoFi. I just own so many friggin' shares now. But if SoFi goes back to 15 bucks, like, come on. I'm going to buy more shares. Robinhood is fighting for its life here to really stay above in $90. If Robinhood gets kicked in the teeth, I haven't bought Robinhood shares in a while. Probably going to buy maybe a couple more Robinhood shares. Palantir, we got their earnings, I believe, next week. Palantir, yes, Monday of next week. I could very much more Palantir. Palantir is attractive because their earnings have caught up to their crazy evaluation. Meta, for me to start buying, one, their CapEx spending needs to pull back, and their stock price really does need to crash. If Meta goes into, call me crazy, if Meta goes into $400 or something like that, I'm going to be depositing a lot of money into this account, and I got to take advantage of a phenomenal company. ServiceNow seeing a great rebound. Coinbase, they're probably going to get kicked in the teeth. I'm probably going to buy more. And Netflix, I actually gotta become a little more aggressive with my Netflix buys here. But I'm ultimately really holding off on doing a lot of buys because I really want to see earnings, and I really want to see if any of these stocks really go down anymore. Now, if stocks all go up after earnings, it's a win-win for me. It really is. My positions are very much good. Am I going to buy more Ethereum? Well, if Ethereum and also Bitcoin bottoms in December, like a lot of people are saying, Ethereum would be $1,000 or $900. Yeah, I would buy more Ethereum. Bitcoin supposedly would be friggin' $30,000. I would. Oh man, I would have to be pretty much depleting a lot of move cash around. Let me just say that. But I would have to take that opportunity. Yeah, I am a crypto bull. But at the same time, nobody truly knows the future. Even evil forces that control evil people, they can only so much. They obviously, Wall Streeters do have an edge on retail people like myself and a lot of you all, but ultimately they may know more than us, but at the same time they can also be wrong too. So on a closing note, yeah, this video is longer than 20 minutes, but hey, a lot of stuff to talk about. This week is going to be crazy for earnings. I'm really excited. Good vibes all around. Once again, happy Monday, and I'll be back tomorrow for a brand new episode. Stay tuned for more content, everyone, and later.